Hello everyone, welcome to my channel Day Trading Stock. This video I would like to discuss about the trade management for intraday trades based on the levels defined. So I'm sharing Nifty and Bank Nifty levels every day, even stocks levels. So based on those predefined stock levels, either buy side or sell side or positive side or negative side, how do we manage a trade? That is what I'm going to discuss in this video. Post this explanation. If you still have any questions or any doubts, then you can contact me at 8106864386, or you can send an email at daytradingstock6@gmail.com. So these are my contact details. Other than that, if you have any questions or any other information regarding other stocks, then you can contact me at either mobile number or email. So before going to the details, the disclaimer. This is just for information purpose only. This is education purpose, not intended to anyone to buy or sell any securities. Either myself or the channel is not responsible for any of your profit or loss with the channel sessions. All investors are advised to conduct proper research or consult other financial advisor before making any investment decision. So, how do I trade stocks intraday? Are my trade management for intraday stocks or my day trading rules? So for this presentation, this video, I am taking a live example of 13th September 2019 data, which I shared in my YouTube video as well as to my other forums. This is how I share the information, the Nifty and Bank Nifty levels and stock levels, both side, upside and downside, positive side and negative side. So for this example, I have taken two stocks. One is BPCL and the other one is Glenmark. If you go back and check the data on 13th September 2019, BPCL hit the third target on positive side and Glenmark hit the third target on negative side. So both side the stock hit the third target. That's why I took the example of these two stocks with the live information. So the basic rules for day trading. My sincere request is do not trade first 15 minutes after opening the market, because first 15 minutes you can see the volatile gaps, either upside gap up or gap down opening, and within first 15 minutes you won't get a direction. So after 15 to 30 minutes only you can see the direction of the price movement, which side the price is going to move, and you can get a sense of the pre-market trend. So the open is so volatile that you can go from being profit to loss within seconds because of huge volatility in the first 15 minutes. And again, for the first 15 minutes, volatile movements are based on the news and other information post the previous day's market close and current day's market open. In between this time, there could be some information, some news or some issues for the respective companies or overall index. So based on that, the first 15 minutes, the panic will be in the market and people will buy or sell based on the situation. If it is a positive news, then people will jump into the opening pre-market opening, and they want to buy immediately with the open price because they expect the huge movement to will happen in the stock. So always it is better to wait for 15 minutes. The other one is the first 5 minutes after the market opens is a crazy period. It is always better to wait 15 minutes after the market opens to enter a trade. Instead of guessing which way the stock will go as soon as it opens, wait for a little bit of confirmation and that a few candles form. At least what I suggest is minimum 3 5 minutes bars, and then we have to follow the simple rules that works based on our trading strategies. So based on our predefined strategies, because in my case I define the buy and positive side and negative side levels for stocks as well as index. So I will wait for first 15 minutes. So based on the 15 minutes chart, I use a 15-minute chart and look to see if it's break the price action on first 15 minutes candle. Then if it break upward, the trend is usually bullish, and I will look for the long positions on the security. or the price breakdown break the bottom of the first 15 minutes candle, then I'll take it as a bearish candle and I will go short in those stocks. And again, if these are aligning with my predefined levels, and most momentum stocks will trade with the large range during the market opens because the news flows and other things. And the pre-market trend is a good indicator of how a stock will behave at the market open. So then we can find out, but sometimes it may fail. But majority of the cases, the pre-market trend is a good indicator. If you are long biased on the stock and it is at least 4 to 5 points or based on the stock volume, stock price movement, then you have to take a different decision rather than the going forward to the existing plan. So that's why it is always better to wait for, even though the pre-market uh, trend is clear, if you are very strong enough that the trend is following, then you can enter the trade. Otherwise, wait some time and get a confirmation, then follow the trade. So uptrend, the trade management for uptrend. This is the example. BPCL buy above 391, target 396, 402 and 409 with a stop loss 384. Or sell below 384 for a target of 380, 374 and 367 with the stop loss 392. First thing, when the stock price up above the entry price, so our entry price is 391 and sustains, at least see the strength of that trend, if it is able to manage 391 levels, and by keeping a stop loss as specified. So first we will enter at 391 a buy order, the stop loss 384, and wait some time, buy order about 391 and stop loss at 384. See here, sometimes if the stock is trading at 393, then you can enter a buy order because your first target would be around 396 and it is in positive zone. So need not wait for again come back to 391. Suppose if the stock is at 395 or 94, and you can enter a buy order and wait for first target, second target and third target. You not wait for again it come back to 391. When we are giving a level above that level, the stock would be positive. That doesn't mean exactly that point at 391 that stock would be positive. That is not the meaning. Above that point, above that 391, the stock would be positive. So I will take a buy call from here. So what I will do is I will enter a buy trade between 391 to 393, 94 levels even, but not above 396 initially. Then I will wait for 396, the first target. And if the price crosses the first target and is sustaining uptrend, still I see if the trend is very strong, then I will change the stop loss from initial 384 to 396, because once the price crossed above 396, then at least I will wait at least 398 or 99 levels. Not immediately once it crossed 396, but I will wait at least 398, 390 levels, or even close to the 400 levels. Then I will change my stop loss from 384, that is the initial stop loss, to 396, the first target. So I am locking the profit at first target. And once the price crossed the second target, that is above 402, then I'll watch if the price is moving above 402 levels, then I will change my stop loss from 396 to 402, because I'll see once it is moved above 403 or 404, then or 405 in that case maybe. The good idea is you can make a difference between suppose the average between these two numbers and take it as the number. Once the price moved above that number, then you can change the stop loss. So here at least 404, 405 levels I will wait. Once that price moved that level, then I will change my stop loss from 400 to 4, from 396 to 402. So once it is moved close to 404 levels, 405 levels, then I will move to 402. And after moving above the third target, above 409, I will change my stop loss. Once it moves around 410, 411 levels, I will change my stop loss to 402 to 409. And that would be my lowest stop loss for the day. Once it is moved above the third target, I won't change the stop loss below 409 again. I will keep on trailing stop loss. Suppose if it moves to 415, then I will change to 411 or 12. And once it moves to 420 even, I will change to 415 or 16. So once it is moved above a particular level, then the stop loss would be for a buy side. The stop loss would be above the previous stop loss, not below that levels. So this is how I manage a trade, an upside, the positive side or buy side trades. And a downtrend, Glenmark here sell below 382, target 379, 375 and 369 with the stop loss 388. So here once the stock price fall below the entry price, at least once it is at around 382, 381 levels, then enter a trade, sell trade, enter a sell order with a stop loss order 388. 388 would be the initial stop loss for this trade. So my order would be sell at 382 or 381 with the stop loss 388. That is the order placed and it is executed, assume. Then I will wait for the price fall below 379 levels. If the price crosses first target and is sustaining downtrend, then place a stop loss slightly below or at the entry price at wait for second target. What I would do is I will change the stop loss from 388 to, that is initial stop loss 388 to 379. So this is the first target. So once the target is achieved and still the price is falling, then I will change my stop loss from 388 to 379 and I will watch if there is still a potential to fall the stock. So if the price crosses second target and is sustaining downtrend, then place a stop loss at second target and wait for third target. So here once the stock is below 375, I will change the stop loss from 379 to 375. That means so once the price is below 374, 73 levels, then I will change my stop loss from 379 to 375. That would be my third time of changing the stop loss from 388 to 379, 379 to 375. And after falling below the third target, once the stock fall below 316, that means once it is at around 368 or 367, I will change my stop loss from 375 to 369. That would be the third target, and I am locking the profit at 369. So my entry price is at 382 and my last locked profit is 369. Assume if the stock still falling, once it is reached 365 levels, I will change my stop loss from 369 to 367 or 66 based on the price movement, even 368. That is a trailing stop loss, 1 rupee, 1 rupee or 1 rupee, 2 rupees. If this price is very high, above 1000, then we can change at least 2 to 3 rupees once based on the direction. So this is how you have to lock your profits by changing that stop loss every time. You need not immediately exit. Suppose once I entered a sell order at 382, once the price hit the 379, need not to square off the position immediately. You can wait. If still there is a strength in that stock trend and you are expecting still more fall in that stock, then just wait, let the stock fall below these levels, then change the stop loss from initial stop loss to first target, again play with the stock price. This is the way how I trade on both the sides, buy side or sell side, based on the predefined price targets. Thank you. If you have any questions, you can contact me at 8106864386 or you can send an email at daytradingstock6@gmail.com. If you need more information about any other stocks or any other information regarding the investments, you can contact either phone number or email. Thank you. And I request to subscribe to the channel so that you'll get a notification whenever I post such videos. Thank you. I wish you all the best.